Valuing intangible assets. Intangible assets, such as patents, copyrights, trademarks and customer lists, can have substantial value. But, unless they're purchased from a third party, you might not know what they're currently worth. Owners of intangibles need to know the value of these assets in various situations. For example, the value of intangible assets may be relevant when buying or selling a business, reporting acquired intangibles under U.S. Generally Accepted Accounting Principles, GAAP, licensing rights to or joint venturing with a third party, and litigating asset infringement or breach claims. The value of intangibles also can be important in matters such as divorce settlements and estate planning. Market approach. Value may be based on transactions involving assets that are similar to the subject property. Once comparable transactions are selected, multipliers are devised to compare those transactions to the subject asset, and prices are adjusted accordingly. Cost approach. Value is sometimes determined by quantifying the costs the intended buyer would incur to develop or acquire the intellectual property asset. Perhaps the most critical factor under the cost approach is which cost to determine: the cost to reproduce the asset or the cost to replace it. The replacement asset may be superior to the subject asset in some way, requiring an adjustment to the valuation. Income approach. Value is often derived from the asset's future economic benefits. There are two common techniques that fall under this approach. First, under the direct capitalization method, the income associated with the property for a single future period is calculated. Then that figure is divided by an appropriate rate of return or capitalization rate. Alternatively, under the discounted future economic benefits method, the valuator projects income for several periods into the future and converts that income to present value using a discount rate. The discount rate represents the investor's required rate of return over the projection period. Both the direct capitalization and the discounted future economic benefits rates are adjusted for a variety of factors. Get it right. When it comes to valuing intangibles, the market and cost approaches are generally more difficult to apply than the income approach. When handling these hard-to-value assets, it's critical to hire a qualified business valuator with expertise in valuing intangibles to help determine what's right for your situation.